Onto your markets news now. Asian markets closed mixed at the close of the week, with mainland China and Hong Kong stocks reversing yesterday's gains. This as market players focused on Chinese authorities' expected pronouncements on possible further stimulus for that economy. The US Fed cut interest rates, proving insufficient to encourage sentiment. The Nikkei share average rose by 0.33%. The Hang Seng Index declined by 1.07%, while the Shanghai Composite Index closed down 0.53%. U.S. markets continued on their winning streak yesterday, with the S&P 500 and Nasdaq registering new record highs. Positive sentiment was underpinned by the Trump presidential win, as he's seen as more business-friendly, and supported by the Fed Reserve cutting interest rates by a further 25 basis points. In its comments, the Fed attributed a softening labor market and a slowdown in inflation to its latest decision, although it did caution that inflation was still on the elevated side. The Dow Jones Industrial Average closed flat. The S&P 500 rose by 0.74%, while the Nasdaq Composite Index ended the session up 1.5%. The JSE is currently weaker at this hour. The all-share index has dropped by 1.1%, hovering at around 85,000 index points. The industrial 25 index is 0.7% lower. Financials are also lower. Top 10 resources index has declined by 2.4%, and precious metals and mining index are off by 2.3%. The rand is trading at 17.50 against the US dollar, 22.69 vis-a-vis the British pound, 18.87 against the euro, and 11.58 and 1 rand 30. One to the Botswana pula. Looking at commodities, gold is trading at $2,000, and 688 cents, and platinum at $984 per ounce, while Brent crude oil is trading at $74.49 a barrel. Well, for more on the markets, I'm joined by Warwick Lucas. He's from Vunani Securities. Thank you very much, Warwick, for joining us. So the rally on most US markets continues pretty much in line with expectations, and it shows, of course, that they're quite happy with a Donald Trump win. And on top of that, we've had the Fed cut rates by 25 basis points. Your thoughts?
So very clearly, the pollsters got it badly wrong. Now, betting markets were actually much more accurate and got it pretty right. So to some degree, a Trump win was actually starting to get priced into markets already over the last month, we could say. The bond markets already reflected potentially higher rates on the logic that low tax rates would persist. And hence there would be so-called fiscal expansion, which is basically borrowing to fund things more than using taxes. Now, this stage, I mean, detail is somewhat lacking. So we saw the Thursday rate cut really just predominated and came to the fore instead. And we could probably say the same for the gold price. And then, of course, on the equity side there, well, as we saw with traders clapping, etc., they obviously seem to expect business-friendly results from both Trump and handily from interest rates as well.
Yeah. So, Warwick, what both excites you and worries you about a Donald Trump presidency from your vantage point?
So I think perhaps it's worth sort of touching on how on earth did he win. And I think what was very instructive there, as was the case with many elections in recent times, and that is just how badly political elites are not doing the necessary to understand the people and their lived reality. Now, in the US, Trump increased his vote share from not only his traditional vote base, but all Hispanics, all women, all young people, and all African Americans. Now, Harris had no campaign other than don't vote for Trump. And I think as South Africans, although Trump is noisy and not very likable, I mean, the past interactions with South Africa in his previous presidency weren't that difficult. I mean, obviously there were points of friction, but I suppose in some ways it's perhaps fortunate that South Africa doesn't feature on his radar simply because he's going to be so internally focused. I think the thing that South Africa needs to remember about Trump is he's easy to work with in some ways because he's so transactional by nature. And indeed, if we focused on building two-way trade with the US with some allowances for US product, I mean, we might actually be pleasantly surprised because US goods are quite excellent. I think Trump will be very much domestically focused initially. Think about things like Obamacare getting knocked out or restructured, and more interaction with US government institutions, which in his first presidency were quite poor and haphazard. And that'll be more intense, I think. I mean, as far as wars go, I mean, he dislikes them as a waste of blood and treasure. But we also saw that he saw Afghanistan right through to the end of his presidency, which was a major promise of his originally to get out. And although his bias might be to de-escalate Ukraine and Palestinian wars, I mean, remember that the number one sales of US gas are going into Europe. So, it's going to be a lot about interest with him. He'll still lean hard on China. I think especially as China has become more insular as well, he can afford to. So expect further trade friction with China, even though, frankly, relations would have been frosty with the Dems in power as well.
And very quickly, Warwick, following on from the Fed Reserve cutting interest rates, can we expect the Reserve Bank to also cut rates a little bit later this month?
Bit of a difficult one. I mean, we wanted a promising report card from the medium-term budget, and we didn't really get it. The rand's been weak, and the fuel price at this stage is not showing any scope for further cuts there. So, I mean, the cut by the Fed is very helpful, but the other issue is going to be, well, what's the SARB going to do in terms of its longer-term CPI ambitions as well? So we could see a cut. I hope we'll see a cut because the economy probably needs it, but don't take it as a slam dunk.
All right. We're going to leave it there. Warwick, thank you so much for your time as always. Warwick Lucas, he's a portfolio manager at Vunani Securities.